Everyone that has 0.0001 Bitcoin has seen the market and seen that Bitcoin drop from 124k to 70 and thought, over the next 12 months, it's probably not going to be 150. We're probably not going to see an all-time high.
Exchange coins, they always do well in the bull market and they don't do so well in the bear market, but they always make a comeback because, you know what I mean, how their profit works is they generate profit through a lot of transactional fees, and obviously the more volume, the more the higher they take it. So
the fact that Kraken has decided to delay their IPO is a symptom of what's to come. I think a lot of crypto companies are going to start holding fire on all sorts. And even me, I've seen crypto companies like that have been putting jobs out there for customers, or putting RFQs out there for people. I've seen them like pulling a lot of those back, and yeah, they're feeling the crunch. Like,
one of them is a bit controversial, but I think it has legs. So Dino coins. Now, I wouldn't look at it as necessarily a long-term investment. I would look at it as more of a trade.
The content presented in this podcast is intended for informational and educational purposes only. It should not be considered as financial advice, and listeners are encouraged to conduct their own research or consult with a qualified professional before making any investment decisions.
Crypto flip.
In this week's episode, we'll be talking about Citibank and why they've revised their price targets for Bitcoin and what it is currently. We'll also be discussing why the popular exchange Kraken has decided to freeze its IPO and what effect that may have on the market. And we'll get into 3 types of projects that survive every bear market. And finally, we'll be discussing how whales manipulate the price and how you can trade with them and not against them. But before we get into it, welcome to Crypto Flip. If it's your first time here, don't forget to like, comment, and subscribe if you're watching on YouTube. And if you're listening on audio platforms, don't forget to leave a comment because it really helps us grow. We drop a podcast every Monday discussing news and strategies that help crypto traders and investors become better and give you a better edge in the market. So Citibank originally had a 12-month forecast for Bitcoin of $143,000 for the top of the bear market. For the top of the bull market. Now, they've revised it down to $112,000 within this 12-month period. So it seems as though they're not as bullish as they once were, which, given the current market cycle and also geopolitical events, makes a lot of sense. But why do you think they had it at $143,000 in the first place? And do you think that we can go back up to $112,000 within the next 12 months?
I think the thing I find surprising, is why this is news from Citibank. Like, everyone that has 0.0001 Bitcoin has seen the market and seen that Bitcoin drop from 124k to 70 and thought, over the next 12 months, it's probably not going to be 150. We're probably not going to see an all-time high. So I don't know why these guys feel like them saying this is going to make any difference to the market. I don't see Bitcoin hitting 112k within the next 12 months. I just don't. And I don't see ETH going up to 3.2 anytime soon either. So hold tight them for the prediction. But again, I wouldn't be trusting them to hold my money.
No, but I hear your point, Rick, because like at the end of the day, I think to answer your question, you said, well, like, why are they even giving predictions? I think sometimes these banks, they give kind of forecast what they think the price of an asset will be, or whether it's stocks or crypto. And obviously events planners and people that are obviously traders use that as a guideline to see if, can I trade? Is there still upside? Or is there downside? So they've always done that. You know what I mean? At the end of the day, I feel like I'm wondering why it's so high already. Like that's the main question for me. I'm wondering why is it from, what did you say it was again? From down from 140. If we range back up, because I think obviously right now we got rejected around that 5 $100,000 range, and we're back down to like 71K. If we range from 71K to 113 or 112, that's a good move. That's a good 30, 35%, 40%, isn't it? You know what I mean? But I don't know if that's possible. I do think we range to probably 85, 90K, give people some hope. But 112 is really, really like up there, in my opinion. I think we'll be lucky to even get there. And ETH 3.1, that hasn't happened in a long time. So it's I think these predictions are, or these targets are, and there might be, even though it's a 12-month target, they're still a little bit too high for me. I think I'm looking at more like, I'll reduce that to probably 98K. Like, and that's me being generous, and that's me feeling, me jubilant about, things. This is obviously assuming the geopolitical tension kind of slows down, dies down, and then we get some kind of relief rally, and maybe we'll see that 98K, but 112 is just packed, in my opinion. I think they're just trying to fool investors and traders, so I'll be careful.
Yeah, I think when looking at this, it's given the sentiment, fear and greed index, what's happening in Iran, which is no longer just restricted to Iran, like a lot of different countries are now involved. What can potentially happen and what will most likely happen with inflation, all of these factors, I think that, yeah, they're right to reduce their price prediction. What a more sensible price prediction probably would be between sort of the 80 to 90 range. That would be something in my estimation, but when you're going well over 100 and 143, I think you're not really dealing in reality, and these are supposedly supposed to be the experts. So yeah, I think they're kind of off with that. And someone else who thought something was off is Kraken, because they have decided to postpone their hotly anticipated IPO to an undisclosed date, presumably when market conditions get better. But what do you think led them to delay, and what impact do you think this could have on the rest of the market?
I think it's the other way around. I think it's what has the rest of the market had on Kraken, on crypto companies that want to ICO. The fact that they delayed their ICO is nothing new. They've delayed their ICO a bunch of times, and that's just what it is. I think they're waiting until the market's super hot to do their ICO, but they should have probably done that last year, because the market was hot last year, bro. It was hot for the whole year. Whether or not we had all-time highs for the whole year is a different story, but they should have probably done it then. I think Coinbase had a record year last year, and that could have been Kraken if they IPO. I don't see their IPO doing much to the market at all. I think if people want to invest in companies that have like stocks that have crypto exposure, there's so many companies they can choose from. And is Kraken doing exceptionally well? Not really. I think though, the fact that Kraken has decided to delay their IPO is a symptom of what's to come. I think a lot of crypto companies are going to start holding fire on all sorts. And even me, I've seen crypto companies like that have been putting jobs out there for customers, or putting RFQs out there for people. I've seen them like pulling a lot of those back, and yeah, they're feeling the crunch. Like, I know people that are interviewing at crypto companies and their interview process just got stopped. I'm like, well, how come? It's like, yeah, I just got an email about how, market conditions, blah, blah, blah. I'm like, okay, that's a shame. But yeah, that's the fact that they're not IPO is pretty much along the same lines. The market is what the market is, isn't it?
I think this obviously, like you guys already said, the market concern around, not having that, like they put in this IPO around November 2025, and Bitcoin was around 112 that time. Now it's obviously way, way below, and the valuation was around 20 billion at that time. They're probably not certain they can realize that valuation currently, because 20 billion for me right now is a little bit too high for Kraken, in my opinion, a little bit. So, I would I would have done the same thing, honestly. Even though obviously the adjusted revenue is still meant to increase next year as well, 33% the projecting, but I would have given a pause too, and I think maybe they should have done it last year, but 2027, I think OpenAI is doing that one this year, but late December, so they'll probably try and do the same thing, like probably late this year or early next year. So, which is a good idea. So, because 20 billion valuation right now, more like, I think they're probably more like 12 billion valuation in my opinion, not 20 billion, because I think that's a bit too high in my opinion for Kraken.
Yeah, I think market conditions in all markets are very choppy. But the bad news is that it's probably not going to get better before. It's probably going to get worse before it gets better. So with them delaying, I understand that other projects have delayed their offerings as well. And when it comes to IPO specifically, there's obviously a lot more to consider as opposed to an ICO in the crypto markets. So, yeah, am I surprised? Not really. I'll probably be more surprised if they actually went through with it, to be honest. But the ramifications could be that some of that wealth doesn't flow back into crypto, because obviously there'll be newly minted millionaires, founding team, early engineers. So all of that capital may not see crypto until obviously they decide to pull the trigger. So that could have a potential effect. And when I say go into crypto, I don't just mean as liquidity. I mean investing in new crypto startups and things like that, things that actually push the space forward. And that's the type of thing that we need to kickstart the next leg of innovation. So that's probably my primary concern, but I don't think it's a huge one for now because a lot of building actually happens during the bear market. So if we can get a few of these IPOs going, then yeah, I think things will look a lot more bullish. And something that doesn't necessarily look bullish is the bear market. But how can you counter it? Well, we're going to discuss 3 types of crypto projects that survive every bear market. So I want us all to think of a specific type of projects, one that you've seen somehow stay relevant despite the peaks and the troughs, despite the booms and the busts, and can make a good investment this bear market. Or if it's something that hasn't already happened, something that could happen in the future.
I think first one I'll mention is probably exchange coins, because exchange coins, they always do well in the bull market and they don't do so well in the bear market, but they always make a comeback because how their profit works is they generate profit through a lot of transactional fees, and obviously the more volume, the more the higher they take it. So, and then the more like they burn tokens to increase their base value. So it's like, always like, especially the top, like obviously right now the top that obviously I mentioned now is BNB, but there's KuCoin shares and there's Gate token, and most of the only one that doesn't have a token is Coinbase and Kraken, and probably a few other ones as well that obviously, KuCoin does have a coin. But yeah, there's a few top exchanges that don't have a coin, but the number one exchange in the world, Binance, does have a token. Their token always do well in every single bear market, consistently makes new all-time highs in new bear market and in the new bull market. So I think exchange tokens are here to stay, unless barring you go into insolvency or something. So I think they will kind of do well, because the more people, the more money they make, the more volume that's generated. So that's one. I'll give a bonus one. So exchange tokens and L1s. And then don't get that confused as those L2s that have been dying. I'm talking about L1s that are like things that you build on top, things that are the things that have programmer, things that allow you to program smart contracts. So things that say on infrastructure, Ethereum, the infrastructure, even to a certain extent, Cosmos. That's the reason why I like Cosmos still existed, because it's an L1. If it wasn't L2, it would be dead currently. Or like this other L1s that are just as good. So top twos, L1s that I'll mention for me that I like is obviously Solana and Ethereum. So I feel like L1s are here to stay. Even we'll put Sui in there, but you know what I mean. I think we'll see. I think the judgment remains for Sui because they might not make it next cycle. So the top 2 L1 that made it over the previous 3, 4, 5 cycles are obviously Sui. I'm sorry, Solana and Ethereum. So that's what I'm thinking.
Yeah, I think those are some really good ones. A couple that I'm gonna talk about. One of them is a bit controversial, but I think it has legs. So Dino coins. Now I wouldn't look at it as necessarily a long-term investment. I would look at it as more of a trade. And the reason why is because even if you go into the top 20, you'll see a lot of Dino coins there, and you can pick them up for relatively under market value when the bear market hits, because obviously the liquidity gets sucked up. Now they may not necessarily do an all-time high, but they may be times of strength, and one of the reasons for that is when retail comes back in during the bull market, one of the things they look for is familiar tokens, so tokens from previous markets. And if there's some of the strong ones, particularly in the top 20, then, we may get a 30%, 40% pump, maybe even more. But we've seen that with like Monero. We've seen that previously in previous cycles with like Dogecoin. So it happens, and we always see it with XRP. So even though I may not be necessarily a fan of some of these tokens, that doesn't mean that money can't be made. So that would be one. The second one I would say are tokens with a very, very strong community. Now this can extend to meme coins, this can extend to altcoins, but the fundamental principle is if there's a strong community in the bear market, and obviously it's a solid project, that goes without saying, then the market is underpricing it, and there's you just have to wait for everybody else to catch up. So this has been true with a lot of tokens in prior markets. If you look at, like, for example, Pepe, SHIB, like there's a lot of these types of community first tokens that aren't dying. Now they'll see a significant drawback, but they still have a lot of upside once they've pulled that to insane levels when the bull market comes around. So those are some of the opportunities that I think you can be looking at this bear market cycle. And another opportunity is how to avoid getting crushed by whales. So how can we spot whale manipulation? And more importantly, how can you potentially take advantage of it?
Obviously, the easiest answer would be to follow smart money. I think smart money usually wins in this space. So I feel like, there are wallets out there that you can kind of track. There's some people create services around that actually that you can obviously track P&Ls and stuff like that. So I think that's one thing. I think two is not aping into crypto projects. I think this is where you really incentivize the world. Let's say now you have 100K to play with, and you see this meme coin. You see like, oh man, this meme coin, it looks good. You like kind of checks out all your criteria. Aping in your entire 100K will be exactly what they will want you to do, so they can use you as exit liquidity. So you probably want to just scale in. The more kind of like the more confirmations you get from that project, and even if it means scaling in at only 1%, that's okay. At least you had skin in the game. I mean, if it under X, you're still good. If it 10X, you're good. If it dies down, if it falls up a cliff, you're only down $1,000. You know what I'm saying? So I think personally for me, that's how I can always operate in this space, because you never really know. Like, you know what I mean? There's fast rug and then there's slow rug. A lot of these L2s are slow rugs because Vitalik started to come out now and say, better start having a USP, because if you don't, then you're just an Ethereum L2 with no functionality and just eating up transactional fees, no revenue. You're not gonna survive in this space because there's even smarter money. There's even smarter money in this space now with all the institutional investing that's happening. So I feel like at the end of the day, you wanna, you know what I mean, see institutional investors are buying ETFs or Bitcoin, Solana, Ethereum, all that kind of stuff. But you're out here in the trenches pouring your savings on meme coins. Like, you know what I mean? You should be on the smart money side. You know what I mean? Like, even if it means, oh, your return is 300%, instead of chasing 50,000%, I want to take that secure 300% and just, you know what I mean, go home with that and knowing that at least I did something rather than praying and hoping and just basically playing lottery. So that's how to kind of avoid that with manipulation, because where they operate is where there's low volume, but like there is something shiny about the narrative. Like, perfect example is the hyperliquid killer. You know what I mean? That's always the narrative that people like. There's always a narrative around a crypto, what's it called? A crypto trap. They're like, it's called a honey trap. You know what I mean? They'll call it something killer, Ethereum killer, this killer, hyperliquid killer. Listen, Asta ain't doing no killing right now. So that was just a slow, which I can't even say that was a quick rug. So yeah, so that answers
allegedly. I think you covered most of it, but I would just like to chime in when it comes to wallet tracking, some things to watch out for. So if a whale apes into a project, don't ape into that project after the whale, because then you'll just become the exit liquidity. A smarter way to do things, especially if it's, you know, a low market cap. A smarter way to do things is, number one, avoid low market caps. But if you are going to go into that space, look for multiple smart wallets, and obviously look for allocation. And also use tools to see if there's any clusters between the wallets, so you know things are related. So there's a few different tools that you can use. Maybe we'll get into that in another podcast, so I don't have that in front of me right now, and I can't remember off the top of my head. But when you use a few of those different tools, you can avoid being exit liquidity, and you can focus on, so, okay, does this have a narrative? You know, does this have a long-term potential? What's the what's like the velocity? Are things moving? Is there a plan? Is there a roadmap? Obviously, anyone can write anything on the roadmap, but is there at least one? So, yeah, that's how you can, you know, begin to avoid getting dumped on. And in terms of like taking advantage of whales, I would say just make sure that you're dealing with higher market cap coins, because if those whales do get into it and they're smart money, and there's a few of them,
That's a good point. That's a good.
Then you can use it as a signal rather than just blindly copy trading. And just, you know, once you get that signal, then you can do your research, do your checks, and then if it's legit, then that's an opportunity to make money. I use that strategy myself when getting into some of those hype tokens, you know, in the earlier part of the bull market, which was, or actually towards the latter side of it, when, you know, you had, you know, your Trumps and your Melanias and stuff like that. And I was like, is this real? Is this not real? Because these things tend to happen before you see it on your timeline and stuff like that. So sometimes you have to move quick, and you have to move even faster in this cycle compared to previous ones, because obviously it's very transitionary, and, you know, it's moves from one sector to another very fast. So yeah, those are some of the things that I think you need to look out for. And yeah, it may change moving into next cycle, but for now, that would be what I suggest. So with that being said, we'll see you guys in the next one. Peace.